Is there any risk with Revolut? That is the question that is keeping so many of you up at night, isn't it? You see this slick, digital app, you see your friends or your adult children using it to send money across the globe instantly, or to get great exchange rates when they travel, and you think to yourself, wow, that looks convenient. But then, that little voice of wisdom in your head, the one born out of living through real financial crashes, market downturns, and the collapses of traditional institutions, starts talking to you. It asks you the ultimate question, the only question that truly matters when you are retired or standing right on the doorstep of retirement. Is my hard-earned money safe there? Or am I taking an unnecessary risk with the money that is supposed to fund my peace of mind? Listen to me closely. When you are in the wealth accumulation phase of your life, you can afford to take a few risks. You can afford a little trial and error. But when you are in the retirement phase, you are in the wealth preservation phase. Protecting what you have is your number one job. So today, we are going to strip away the marketing fluff, look past the shiny smartphone app, and look at the raw financial truth about Revolut so you can decide exactly where your money belongs. Let's start with the most massive, fundamental fear that every single retiree has. If this company goes under tomorrow, does my money vanish into thin air? To answer that, we have to look at how Revolut is set up, because it completely depends on where you live and what kind of account you have. Now, for years, the biggest red flag with Revolut, especially for people in the UK, was that it wasn't technically a traditional bank. It was what we call an electronic money institution, or an EMI. And as an EMI, it didn't have standard government-backed deposit insurance. Instead, it used a system called safeguarding, meaning your money was kept in separate accounts at major traditional banks, isolated from Revolut's own business expenses. But things changed. Revolut was finally granted its full, unrestricted UK banking license. What does that mean for you in plain English? It means that if you are in the UK or the European Union, where they also operate under a full banking license, your standard checking and savings deposits are legally protected by government-backed deposit insurance schemes up to certain limits, like up to £120,000 in the UK. So on paper, the catastrophic risk of the company collapsing and you losing your base savings has drastically gone down. They are now playing by the exact same strict regulatory rules, capital requirements, and government safety nets as the traditional high street banks you've trusted for decades. But does that mean there is zero risk? Oh, absolutely not. And this is where we need to talk about the hidden risks that the glossy advertisements will never tell you about. The number one risk with Revolut and digital fintech companies like it isn't that the bank itself will fail. The risk is that you could get completely locked out of your own money when you need it most. Because these institutions do not have physical brick-and-mortar branches, they rely almost entirely on automated artificial intelligence and algorithms to monitor for fraud and compliance. Now, look, fraud prevention is a good thing. We want companies to stop bad actors. But because these automated systems are so incredibly sensitive, they can sometimes trigger what we call a false positive. If you suddenly transfer a large lump sum of money, say, to buy a car, pay for a major home renovation, or move your retirement funds around, the computer system might instantly flag it as highly suspicious and automatically freeze your account. Imagine being on vacation, or needing to pay an emergency medical bill, and your card is declined. You open the app, and it says your account is under review. You can't walk into a local branch, look a bank manager in the eye, show them your ID, and get it sorted out in 10 minutes. There is no physical door to knock on. You are entirely at the mercy of an in-app chat support system. For a retiree who needs reliable, instant access to their income streams, that lack of physical infrastructure creates an operational risk that can cause immense emotional and financial stress. Then there is the risk of sophisticated fraud. Because Revolut makes moving money so fast and seamless, it has historically been a prime target for authorized push payment scams. This is where a criminal calls you, pretends to be from your utility company, a government agency, or even Revolut's own security team, and panics you into willingly transferring your money out of your account. Because these apps are designed to send money in the blink of an eye, once you press send, that money is gone into cyberspace before you even realize you've been tricked. While traditional banks sometimes have slower processing windows or fraud agents who will call you to verbally verify an unusual transaction before it leaves the building, digital-first platforms often move at a speed that works against you when a scammer is pulling the strings. So, how do we handle this? What is your actionable takeaway? If you want to use Revolut because you love the low fees for international travel, or you want a simple way to give your grandkids some money, or you just want to use their excellent budgeting tools, you can absolutely do that. But you must follow the golden rule of retirement banking: never, ever put all your financial eggs in a digital-only basket. Do not use a digital app as the primary warehouse for your life savings. Your pensions, your primary retirement income, and the bulk of your nest egg should remain safely housed in an established, traditional financial institution that has a proven track record over decades, robust telephone support, and physical branches where a human being can serve you if technology fails. Think of Revolut not as your main vault, but as your digital wallet. Treat it like the physical wallet you carry in your purse or your pocket. You wouldn't walk around town with your entire life savings stuffed into your leather wallet, would you? Of course not. You only carry what you need for everyday spending and minor emergencies.